Good morning, traders. Chris Buss here with Traders Profit Compass with a morning look at markets for Thursday, June 17th. It's 6 o'clock as I'm starting the video. As always, a reminder, feel free to run the video at 1.25 or 1.5x to cut runtime. There'll be plenty of opportunity for you to pause, make a note, and then keep rolling. I think that'll keep the video efficient for you. So we had the FOMC meeting yesterday. I'm not going to try to, give a big summary of that. There's much more qualified people out there than myself to give you that information. Just briefly, the way I read it is the Fed acknowledged the inflation is running hot, but without really doing anything about it. I think they pulled forward the idea that they may have to raise rates earlier than had been outlined in prior months. Maybe we get one or two increases in 2022 instead of 2023. And all that said, no changes to the asset purchases of whatever they're doing now, 180 a month or 180 a month or 120. I think it's 120 a month. I was shocked that nobody asked him about the mortgage-backed securities. They're buying $40 billion a month. Not one question about, with the housing market so strong, do we really need to keep the pedal to the metal there? So all in all, I think it was a de facto tightening. Why? Because I think we've already seen peak Fed. I think this was the first just acknowledgement that things are changing in the economy. And just by saying that, although they're not changing any asset purchase, I think we're on the other side of the mountain as far as Fed accommodation. But we're just like taking that very first baby step. We reached the mountain of peak Fed, and now we just taken the first half step on the other side. And then as time goes on, we'll have to monitor how fast the descent is from peak liquidity. I think there's still quite a ways to go. They've got to lay more groundwork and give more heads up as to when they may reduce asset purchases and then wind towards a first rate increase. But that's way down the road. Also, I want to acknowledge a mistake I made yesterday and probably in other videos as well. I believe I stated the Fed doesn't meet in July. That was wrong. There is a Fed meeting in July, late July, and then Jackson Hole is in late August. So there is one more meeting before Jackson Hole. And of course, in early July, we'll get all the, the inflation and employment and all that kind of stuff for June and early July. So they'll have to put that economic data into the cake and bake it. But out of the FOMC, here are just a couple notes that I made. The 10-year yield popped 6 basis points to 1.57. The dollar was up almost 1%, which is a big move in a currency. Oil remained pretty stable. Gold got annihilated, and banks rallied after the announcement. This morning on the economic front, we've got jobless claims. We've got the Philly Fed. We've got a data release of the leading economic indicators. We've got a natural gas inventory report. And just as a point of reference, every Thursday the Fed publishes their balance sheet at 4:30. If you are interested in looking at that graph or tracking it, you can go to the Fed website or just Google Fed balance sheet, and you should be able to find that. I don't track it that close because it seems like everybody on Twitter posts it, and I just look at theirs. But if you want to, go look at it every Thursday afternoon after 4:30. You can find and track that yourself. So we've burned 5 minutes talking about the Fed. Let's look at the graphs. Let's look at the charts. Here's a chart of the 10-year yield. We were in this little bull flag channel. We hit the bottom of the channel, and now we've popped up to 1.57%. I think on this chart, the next real level is 1.65. You can see it right in here where this downtrend line comes and the uptrend of the channel. So I think the path at least is open up to that 1.65 level. We'll have to see if rates continue to rise rapidly, or they just stabilize, or even do a head fake and reverse. So keep the 10-year yield in focus. Here's the other part of the 10-year yield, and this is the TLT. And with rates rising, TLT is falling. I think the key level on this chart is 140. You go back into the trading range here, then your first target would be 138, and then your ultimate target would be at the bottom of the box at 135, or excuse me, yeah, 135. But then if that breaks, you're going, you're heading towards 1.8, 1.92%, and then the rush will be on. The bond vigilantes will be going wild, because this trading range is 5 points. You break it, your measured move target would be 130. So that would be a pretty big move in TLT. Let's look at gold. Just annihilated. I think it was down $40 or $50. I thought, and it was wrong. This thing started to roll over, and I really think the exit point should have been when price was below the 8 and the 20. That would have saved, you would have taken some heat there, but nothing compared to this. And I chose to wait for the FOMC because that bar could have gone the other way as well. But from a technical standpoint, putting the Fed aside, this should have been once price fell below the 8 and the 20, that's when you've got to get defensive. And just as a reminder on gold, this is the cocktail for gold going higher. Falling dollar, we had a rising dollar of almost 1%, and falling real yields. Well, real yields went up yesterday. Why? Because, well, one, the 10-year rates went up, and the inflation expectation went down. So real yields rose yesterday. So it was a double whammy for gold, and that's why you got the sell-off. Not much to share here on oil. Held its own. It's down a little bit this morning. Oh, I forgot to tell you, looking at the futures, most of the indexes were down about 0.3%. Copper, again, is getting hammered by about 2%. And gold was down just a little bit. But that rising dollar we talked about in our discussion on commodities, that's a big headwind for commodities, rising dollar. So we're going to have to watch that. And remember, the first move out of the Fed is usually fake. So from here on out, we're going to see, now, is there follow through to the dollar? Is there follow through on interest rates? Or are those moves head fakes that they fade? So that's what we should be watching going forward, the end of this week and then into next week. So let's look at the indexes and names, FATMAAN names, and then I'll give you 3 or 4 charts that are setting up for a trade. So SPY 2 hour, Here's the FOMC announcement. Notice this trend line had broken. We lost that 423 key pivot location that we had marked, and then took a deep plunge into this gap, momentum overshoot, and then they bought it back up and closed it here. I think for today and going forward, 423 is your key pivot level. If price cannot retake 423, I think it keeps the chart in a bearish posture. Why? Because we broke this uptrend and then we're below the key pivot. So as long as those two conditions are in place, hard to get too bullish unless 423 is recaptured. Otherwise, we could come back down here for another test of the low. We could fill this gap. All kind of things could happen, but no bullish things can happen until price regains 423 or comes down to a well-defined support level where we can, get long at a lower level at key support. But for right now, I think 423 is the key. And here's the blow up on the 30-minute chart, and you can see that deep look below down to 420. Here's our $2 gap. That was just a look and then a reversal right on back up to 423 and beyond. But notice the wicks above 423. Two big looks inside, and then they closed it back on 423. So I think that's more validation that 423 is the right pivot to work off of. Same kind of idea on the Qs. We had an uptrend line for reference. We are now below that. We lost 342 with a big look down, and then they bought it up. I think 342 is your pivot, and then your first level of support is here at 339.50 on this chart. And here you can see the breakdown on the 30-minute chart. Notice all the touches at 342. You had a candle here that went up, another candle rejected, and then you were rejected on 3 or 4 subsequent candles that tried to get back up above 342. So I think that is your active trading pivot for today on the Qs. IWM, a lot of volatility, a lot of chop. We dropped out of the channel. We have filled this gap. We had a big look down towards this 227.25, and they bought that up. And now we're back above 229. So for today, let's look at it on the hourly, or the 30-minute chart. We've got this little box here between 230.5 and 229. I think that's a little trading range we can work around, but I think your major pivot is 229. That would move price into this void. Maybe come back and test this 227.75 level, actually 227.50. Come back and test that, and then that would be a very important place to hold, because you've got a gap below, and then of course your lower and lower support levels below that. As far as the long side, if you saw price come in this morning, I mentioned we were down 0.3% or whatever, come down to 229 and hold, then you can get long there with a stop just below and look for a move back up to either 230.5 or 231, where this downtrend line comes into play. Take note, however, that PPO is in a bearish mode, as is RSI. So the short-term trend is down. Lower highs and lower lows. So the short-term downtrend is lower. You'll have to decide if trying to get long here for $1.50 is worth it. If you're a super active trader and you can handle that kind of close quarters, hand-to-hand combat with the candles, knock yourself out. I think that's the trade. But you get below 229. I think the right trade is to be short and then look for a move back down to retest this low and to test this gap, and then you'll be in good shape. If that does in fact break, then you'll be in the driver's seat. Moving on to FATMAAN, we had looked at this one yesterday, and we talked about the bulls wanted to see this prior high taken out so price could go on to blue sky territory. That didn't happen. It got rejected here right at the prior high, almost to 338, and then has fallen away back to support at 330. Now, what I did is what I always do. When you've got a double top setup, you measure the distance from the neckline to the base. In this case, it's 2.4%. And now if price loses 230, it triggers the structure. And so the measured move would be 2.4% lower from 330, and that puts you down to 322. So that's the technical target. So bulls got to hold 330. It's just simple as that. If they can do that and kind of invalidate this structure by moving back up, recapturing this 330, 350 level, and then go back up to the top, then everything's fine. But you lose 330, then you got to start looking at the downside. Apple, we had this big breakout that we talked about from 128. We've got all the daily moving averages below price, which are going to help to support it. We had the volatility spike down to 128.50, and we actually had that level already in the chart, so that was kind of nice. And then they bought it up and closed back up above 130, which was a really good sign. After the FOMC meeting, to have that plunge, hold 128, and then bounce back up above 130. That's constructive price action for Apple. So now, from a technical standpoint, nothing happened. Why? Because yesterday our pivot was 130, and today it's 130 as well. So technically, aside from the volatility, we're right back where we were yesterday. What the bulls want to see is a move off of 130 to try and come up and make an attack on this gap. I wouldn't be surprised if it got up here and either was flat out rejected, come back, or hover here right below resistance for a while and gather itself and then make a breakout. I haven't made mention of it yet today, but there's quad witching tomorrow, where we've got all the the quarterly options, the weekly options, the futures options. Everything expires tomorrow, and that puts a lot of pressure in the marketplace, a lot of forces to keep things where they are, because there's going to be people with a lot of call buying and other people with a lot of puts. And if you keep it the same, all those people lose. So that's the force in the market. And so that's why I say, do I foresee Apple, doing a moonshot by tomorrow? No, I don't. But I think what can happen is either we come up here to this gap and think about it a while, or I think best case scenario by tomorrow at the close, fill this gap, which would be a nice move in itself. But I kind of think we're going to come up here and, maybe test that. And, futures and all that stuff are red right now. So we could even come back here to double check this low. So key off of 130, I think it's pretty clear there. Tesla remains in this downtrend channel. They sold it off a little bit yesterday afternoon, but it held 595. All my comments from prior videos are still the same. I think if you're a swing or position trader, you got to wait for a breakout above either 625 or 640 before there's really any chance of a major move. I would set your alarm, wherever you want to get that heads up, maybe 620, and then you can bring it into focus to get long at 625 or 640, depending on how you want to play it. But down here, it's just a time decay machine because it's not really moving enough to move the needle on a weekly option. Microsoft had the nice move into the gap, got about 3/4 of the way up, and then sold off. We came down below the gap, but then closed back above it. From a technical standpoint, 256 has to hold. If you lose 256 this morning, I think it could come all the way back in here to 253, certainly to come back to 254 and test this prior low. But that wouldn't be good if you lost this breakout into the gap. Why? Because anybody that bought all in here would realize that they were wrong and then would probably exit their position. And that's the fuel for the breakdown down below 256. So if you're long, I think that's your kind of like your line in the sand on Microsoft. Amazon had a really nice day. It was up almost 1%. Aside from the volatility, a lot of the Twitter crowd were crowing about they bought this dip and then, of course, went right back up and even extended its gains. So they made a killing on that, buying a weekly option at the lows and then have buyers, step right in and even extend it higher. So that was so what was that? 33.60 to 34.20, $60 move in 2 hours. Make a lot of money that way. So anyways, nice day. Pivots 3,400. Simple as that. You want 3,400 to hold, and you're looking for 3,450. So Amazon seems to be getting some resilience to itself and grinding higher, and that will be a very positive thing for the fat man and technology complex. Google dropped out of the trend, had some volatility, closed back up near the pivot. So I think today your pivot is 24.20. Below it, there'll probably be some backsliding back to 2,400. You lose 2,400, you're coming back to 23.80. On the high side, if price can reclaim that, I think you can be long and look for 24.30 and then 24.50 at the prior high. So we'll have to see how the market goes today. If there's big red day, it's probably not going to jump the pivot here at 24.20. Netflix, nothing. This looks like a head fake now. Big power candles back up above 500, could not hold it. Now they've faded it back into the zone. I put this in the same category as Tesla. Just eating premium alive in here. Very, very tough to make money when you're moving, $5 a day on a $500 stock. It's just tough to do. So I would let that be for a while. Semiconductors, false breakout, move above 252, could not hold it, now back below in this trading range. And a nice example of what we always talk about, once you leave a trading area, once you come back to the trading area and it fails, your automatic target is the bottom of the range. And we did that with one candle. See, it went from 252 back to 248.50, which was our line, and then they held it and closed it inside the range. So today you can be long against 248.50 with the hopes of going back up to 252, or if it loses 248.50, then you've got a little micro level of support here at 247, but otherwise probably coming back to test this zone 244 to 242.50, which was where the breakout actually started. So I think that's going to be a good one to watch for risk sentiment in the tech space, even if you're not going to trade it. Okay, let's see what I got here. I got 5 charts for you. Yeah, 5. So let's look at them. We've been focusing in on housing. This is the Home Builder ETF, ITB. We got a crack yesterday right here at 67. They got to hold the line here or it's 64. So if that is a short that you're interested in, and at the open today, they don't bury it. If it is close to 67, I think you can take that short with a stop just above and look for a down move to 64 where there is some decent support. And you can see the 200 is coming in next down at 62. So the home builders are wobbly. Watch Lennar this morning. They reported last night after the bell. They blew it out of the water. So if that's red after they blew it out of the water, that's telling in and of itself if they can't produce a green candle after beating on everything. So watch home builders. UPS, interesting chart. Why? Because we had a big gap up, probably on earnings, and then a power move up to 215 where it spent a lot of time consolidating, but with momentum and RSI rolling off. And so now price sits right at 200, which is, there's a technical support ledge there, and it's also the 50 EMA. So you got a double layer of support. But price is below the 8 and the 20, so that's cautionary. This isn't meant to be a wishy-washy analysis, but I think it's accurate. We either go higher or lower from here. How's that? That's a true cover your butt call. But I'll tell you what I mean by that. If you lose the 50, if you see price drop down below 200, I think this has the potential to be a really nice short. Why? This big void. There's nobody home with this gap up and fast move. Very little trading in here. So if you lose 200 and the 50, I think you're going to see a flash move down to 187. Probably bounce a little bit on the first touch of this big gap. But once you're down below the 50 and in this void, I think there's a good chance you get a little weak bounce and then this gap fills down to 175, where you got a ton of support, and the 200. So I think that could be a very, very nice trade if that were to fail. Now, the other side of that is price consolidates here while the market is weak. You see PPO flatten out at the 0 line and start to curl up. You see RSI start to move back above 50. You take your long against 200, and then you got the 50 there as support also. And if you get that move and then recapture the fast moving averages, you've got yourself a nice entry point for a long against 200. So I think that's a nice setup for both the bulls and the bears. We just got to see which way it breaks. PayPal, simple setup. You've got a neckline right here at 275. You can set your alarm right there. If technology and these guys get going and you see a breakout above 275, I think you can get long there. And with the prior high up at 305 being your technical target, there's not a lot in here as far as resistance. I think if you break 275, that'll show the market is strong. I think you'll get that move up to 300, something like that, over time if the market cooperates. I don't think this sets up particularly well as a big place to short. You do have a little bearish divergence here, but not a lot. And it's been a strong stock, and you've got all these moving averages to fight on the way down. So that might take some time. Now, what you could do is, if this starts to fail, key off of that 50. And we got the 50 coming in at 260. If it loses the 50, you can take a short from 260 down to 235. That would be a good trade. But I don't like to short when price is above all the moving averages unless it's just some kind of super compelling setup. And I don't think we have that here. Planet Fitness, been chopping in a wide range. Now price is at the bottom of the range. It either holds 72 or it doesn't, but I think that's a key pivot point. If the market falls apart and this thing drops out of its range, which is $16 from 72 to 88, you're already below all the moving averages. Here's the 200. You lose 72. You could come all the way down to, what is that? Come down to 60. Right? That's, I lost track here, $16. So you're looking at like 54, something like that on a measured move basis. So set some alarms around 72. If it holds, it's a great long. I mean, it held all these different places, and you're supposed to buy support. Support is support until it's broken. So if you like the name, and you want to get a really tight long entry, and you're not afraid to wait while this grinds back through these moving averages, then it'll be a nice long. But if that fails, I think that would be a good short. And just revisiting CrowdStrike real quick, this was a name that we flagged the other day. Cup and handle setup, neckline, breakout. Notice that the other day we actually had a back test of it, and then yesterday was up 2.55% in a crappy tape. So that one's looking good. If you're gonna pull the trigger on that, I would do it quickly. And if you got a red candle today that didn't violate this neckline, that brought it back $5 or 250 or whatever it's going to do. It's a very objective long with a good structure in a group that's doing well, along with Palo Alto, Zscaler, FireEye, Cyber. All those names are cybersecurity names. The group is doing well with all the headlines on hacking and all that. If you're new here and you like the analysis, I think it'll really help you keying off of the levels and pivots that I provide. That way you can focus on your execution. If that appeals to you, hit the subscribe button and the alarm bell. And even I would ask you to pass the link along to others in your trading circle. If you like the analysis, it'll help them as well. I'd really appreciate that. And of course, longtime listeners and subscribers, really appreciate your support. Do me a favor, give me a thumbs up and a positive comment. Let others know that you value the information and that it's helping you in your trading. As we wrap up here, remember, the market direction after a Fed announcement is not a one-day event. There's a lot of volatility. I think it may take even into Monday and early next week to start figuring out the real market direction. And we've got the quad witching on Friday. So stay nimble. Stay nimble. I wouldn't, for me, I'm not going to pile in massively one way or another. May take some, tactical longs, tactical shorts in this flux period. And then I think next week we're going to start having an idea because, if rates are up another 7 basis points between now and tomorrow, adding 14 basis points onto the Fed decision, that'll start weighing on technology. I mean, we've seen that in the past. And also we got to keep an eye on the dollar because it's really hard to get long commodities. If the dollar is stacking green candles, it's that's a tough environment for commodities. So we're going to have to watch that very closely as well. So let's wrap it up. This has been Chris Buss with Traders Profit Compass. Talk to you next time.